Good morning, everybody. Well, here's a chart to put things in perspective. And it's been a long time coming to get back down here. I certainly thought it was going to happen. And now we get this greater than 100% retracement and transports breaking the sacred June, July lows that was supposed to be the bottom of the bear market. And clearly that isn't happening. And now we've got this more than a measured move to the downside on the transports. Of course, what's the next stopping point? So I'm going to scrunch this up to see what's underneath here. Because that's what we do, is just look to the left, and 12,000 lines up with a pivot low on the weekly chart. Another 355 points away. What would support it actually getting down there? This little consolidation prior to the break. Remember, before the Fed day, there were 3 days of chop sideways. And it's like, well, maybe it's going to pop back up since it's got the void. Didn't happen, which is bearish. It's a tricky pattern to have, something like this. But one of the things with this kind of a pattern is, like, you're going to know if you're wrong right away. There's no ifs, ands, or buts about it with a pattern like this. And it doesn't matter whether it's the transports or anything else. When you get 3 days of consolidation and then it starts to break again, it gets above there, you got to be out because you got it whipsawed. The thing is, we just don't know, if that's going to happen. We just have to go with the chart, and what it's suggesting in multiple time frames helps us put that in perspective. So set an alert a little bit above here. Look, institutions are all looking at the same thing we are right now. They know this shelf is down here. They know it's a whole number. So 20, 30 points, whatever, 50 points above it, and then just start watching what's, as it moves down toward that level. And this is one market. And that's why we look at other markets. And so, you got the transports going down there. The Dow, I would imagine it's down there right now. You could see the diamonds, and we'll take a peek at the futures. 297. Yeah, they're right down there at the low. All right. So, you know what? This talk that we hear on the media, even if this holds and they say, oh, it held the low, if it reversed, we'll see if that actually happens. Most of the time they break the low. And in any event, a retracement all the way back here like that, you got to put things in perspective of your trading plan and the stocks or markets that you're holding on to, and you need to be what we call a self-directed investor and trader, not reliant on some guru's opinion that says, hey, that's the bear market bottom low. Well, there's still plenty of stocks that are crashing to the downside. And so even if that happens, big freaking deal. It's just talk for the media to go on and on. So we got this low here, 297. It's right there. And then, there isn't much support underneath here. So while the transports, that's a ways down. This, it's below 300 right now. And so there's an unfilled gap down here that could be someplace. So, it's no big deal. Just, set an alert, let it watch and see. One thing I want to see increase today is this put buying. I want to see more put buying today. And I think this open will help accelerate that. And so the breadth internals went back down here where this a little bounce started. And we had some little buy set up on the internals there, just touching the lower band. But, hopefully today, this is going to drop down. And let me just see here, daily sentiment. This is the equity put call ratio. This is the total put call ratio. See if it comes up here to 1.3 today, maybe at the open, 1.5. That would be a good sign that we're getting closer to a low point. Keep an eye on that. Whatever the symbol is in your platform, this is what it is in eSignal. I'm sure it's probably something different in TOS and TradeStation and all that, but it should be close to the same data. So set an alert there just to be aware. And we'll be looking to see, today, by the end of the day or early next week, whether we can get alignment of these market internals. So the breadth is already down to historical extreme level, as you can see. I've seen it go down not well under 340-ish or so, and market bounces from there. So that's something to keep in mind, as ugly as things may look. This is down near levels where markets historically bounce. It doesn't mean it's the bottom. It means bounce, which is what it did here. It was a bounce, and then, it had its chance on this point, to pop back up, and it failed. So now it's got to go down to the next level, and whether that is, I could change that to green for now. It's probably already down here. We'll look at the S&Ps, but I'm hoping it drops all the way down to 3,600. We'll see how it plays out. So futures, you can see they're down here at these pivot lows. Little retest and pop up here. Short-term traders are still going to, trade these little blips. Things get extended like that, and then we see how far they get. It's a nice little 5-minute pattern. Actually, it's really, for a counter trend trade, it's a great one. Pivot low, little red bar reversal, 180, and then it breaks the low in a bottoming tail bar. That's a taker. And so maybe it gets up here, give or take, but that's a nice little bottoming pattern right there, and it lines up with these pivot lows far over to the left on the daily time frame. That was one to print out and put in your scrapbook, or if you use like Microsoft OneNote, just capture it and put it in one of your folders as an intraday pattern. And SPY came down 369, down below 370, and those pivots. And there's a little bouncer there. So Jacob is telling me 3805. 3805. It's down here now. Jacob, you know me. I would agree it shouldn't get back above there, but I think the no-brainer should be, if these markets continue that little bottoming pattern we looked at, it breaks and this thing heads down. We definitely want to be below 3,700, and that'd be right. Let me look over here. 3650. Yeah. One day, 600, 36. Wow. 36.50, $2.50. 36.30. And they start to drop off. 36 and a quarter. And if they had more here, but 36 and a quarter. I think that's a no-brainer. To come down there today, it's like, I'm hoping it would go down there. So as I'm saying, let's see it begin to drop. But this premium down here at 36 and a quarter near a pivot, if it comes down there, if it flows down there, you should wait maybe 5 minutes at the open and see which way this thing, continues up or down. But as the premiums perk up, if we can get below 3,600, it'll be a no-brainer. Because if it flows down there, once it breaks that low, I believe it'll pop back up just based on, the method and how we look at things and price patterns. So, I'm saying 3805. How much is that? 80 by 90. It's above yesterday's high. So yeah, 38.05. I'm not so keen on it, but you got this little shelf here. I like it when they, going down and, kind of like the scream, you can hear the screams and you can get far away. When will I switch to that high def? You mean what I'm displaying here? Since we're doing this through this restream, that may have an effect on that. So I'll have to take a look at that because I can see what the resolution is, 1280 by 7.25. I'll check it out. Alex, do you take into consideration the pivots or price action from when market is closed in the US? Well, sure, that's what I'm doing. I'm looking at the daily chart, Alex. And so I look at the pivots, I look at the ranges that the markets have been trading in. I take into consideration what are the largest bars currently that are happening and kind of take that into consideration as to, well, this is possible in this current market environment. And what you might notice here is that near the top, that's the biggest bar. And then over here, it's a little smaller. And then over here, it's a little smaller. So now, yesterday was a consolidation day. Prices are gapping down. And if we should get some type of an acceleration, maybe something like this, or a range expansion bar down here, that is going to be in alignment with a bias of the markets making a low down here short term. And as I pointed out, the breadth is down here at a historical extreme. It can get down below 300, no doubt. We want to see some bearish sentiment today. We'll call institutions, whoever's pressing that button. We want to see them, betting on a crash. And so that's part of what we do. We can look at what is. We have our toolbox. We have our internal gauges, and we monitor what is happening, in the moment. That's what we do. So in a couple of seconds, Jacob asked about SPX that he asked every day. Yes, and we do that every day. SPY discussion. Well, it's going to be the same. We see what is. It's the same pattern down here, the pivots and breaking the low. So it's just such a high probability pattern when something is moved to a certain level. You're in an area and it starts to bottom and it breaks those lows and forms some kind of a reversal. It could be this kind of a reversal, or it could be a bottoming tail kind of reversal, meaning it went down and it went up. It's a reversal. Call it whatever you want. So it gives you a scalper long based on this time frame and this pattern. What we have here, you've got prices down below 3370. We've got these pivots. The next pivot's down here. Look, the reason I'm hopeful that it goes down and breaks these lows down to 360, not because I want to see more people that are hoping this holds get hurt. I want it because I know historically it's a high probability pattern where you've got a move like this and it goes down here and it takes out the stops. Haven't you ever been in a position where you held on too long, you hoped it would turn around, you're on your knees to the market gods, your stop is here, and at that point, you just know it's going to keep going down, and lo and behold, you got out at the low. Greater than 100% retracement pattern, a wide range bar. So part of your journey as a trader, and what was mine was, how the frig did I sell the low? All right, what do I learn from that? What does that picture look like? And it's like, okay, I got it. I see what it looks like. And so if you're in that kind of situation, go to your trading plan and say, hey, this is what the probability is. Maybe you'll sell half. Maybe you'll you'll do something, right? Or maybe you'll just hold your breath anyway. So this is going down here. Here's the low. And one of the things we talked about was this deep retracement here. And I think yesterday, the day before, I said, look, you got to respect the power of that. But now coming down here, that historical pattern is one in which you get, this measured move that we talked about, and it breaks through the low and it hits the stops. And that's where you get some kind of tradable bounce. I'm not saying it's the bottom of the bear market. We don't know that. When you have these transports that look like hell, it's going to take some time to repair the damage. Some bottoming action like this before we can get some kind of a meaningful move again. And you've got, hey, there's VIX. It's still not popping up. And you got the 3-month, it's still hanging up there, the 5-year. Come on, now the 5-year, it gapped up there, but it got above 4%. So look, things are getting a little extreme, whether you call it breadth, or we look at these yields, it's getting far from the moving average. You got the 10-year, moving up toward 4%. So look, even in the most bullish or bearish markets, trends get extended. They rest a bit. And so as we look at the internals and what's happening right now, if this market will accelerate lower today, maybe break those lows, all this stuff coming into alignment, I think the momentum, the bearish momentum, slows down and we'll see what happens. Look, I'm not trying to foretell the future. I'm just looking at what is here. Historical patterns are our method of how we interpret things, and saying, hey, I'm trying to come up with the best educated probability and a bias. That's it. So Qs, NASDAQ futures, down here at these pivots, third day. Let's get them down to 11,000. Let's hopefully it becomes a no-brainer setup for a reversal. Russell coming down here. So look, everything that's to the left is going to come into play. And then we measure retracements from that. So while I would like to see these break here, if I see a monster retracement here, this bottoming pattern becomes, more convincing, which this isn't, maybe it won't get down there. But right now, the transports are crashed through the June lows. So Bitcoin, so far, holding on to the edge of the cliff. Silver, I don't get it, but flip-flop, I don't know, interest in it. And gold, continuing to break lower. Crude oil, breaking down. So oil going down. This is what, that's the recession people, the inflation people were saying, oh, things are getting better. It's peaked. Well, it's still pretty bad out there. Yeah. Put it in perspective. It's better. I've got this continuous contract, but this was down here, way down. And so, yeah, it's better, but it's still bad. And so even with the price of crude oil and gas coming lower, you got transportation stocks moving goods and services and information crashing. It's like you ever see that? I'm gonna make a joke here, and I got to give it a Dan talking to look. You ever see that Monty Python movie where the knight is getting his arms and legs cut off? And it's like, it's only a flesh wound. And it's kind of like, what these gurus are saying about the market. Or Joe Biden. Oh, it's not so bad. It's not so bad. Meanwhile, he's bleeding to death. All yours, Dan.
Good morning. Talking about Biden and oil, I read in the journal today that his removal of oil from the strategic fund has it at the lowest inventory since 1984. Don't get me started. All right. So yeah, the identical scenario. I'm looking for a swan dive here in the morning, which, let's see, we're you know, we're bouncing here. I mean, Greg went over everything great, so I'm not gonna repeat it. We've been trimming positions, adding some short ones. We have Goldman short. And we spent a lot of time yesterday talking about new setups when the market's, you know, down a lot. And this was a perfect one. So we're in that. You know, Disney was kind of not as good, but that was kind of one of them. I just posted CTVA. It's a bear 1, 2, 3, but it looks like the gap down's going to mess it up. Ring. See, I'd want to short things that are closer to resistance. This is a big descending triangle and a downtrend. So I posted this as, you know, let's wait 30 minutes. I want to see how much we're going to bounce here. But I actually have a put spread bias today, not a call spread bias because of the big gap down. So I'll be looking for the usual suspects. I'll be looking, we got 2 earnings stocks here. I'll be looking for things that obviously have a good opening 30 minutes and we think are going to hold the low for the day. I mean, Netflix is a candidate. It's a very sloppy buy setup, but it's in an uptrend. It's one of the few things. It's the only thing that still is actually, or maybe Tesla. I don't know. Let's look. And all right, so that one's uglier. So Netflix is a definite possibility, 0 DTE. What else? We shorted, oh, Keys was another one, another type of pattern we shorted yesterday. Wednesday, we talked about moving averages, how they speed up the analysis. This is a beautiful moving average analysis with the pattern confirming it. Let's see what it KSS I gave in the green room yesterday as a short. That's a monster head and shoulders and a downtrend. And there was in the journal today something about, I don't know if they're trying to kick out the CFO or whatever, but that looks horrible. Look, that's a head and shoulders in a downtrend. And the monthly has room to fall. TCOM was, I mean, I don't know what's going on. Why is Trip.com gapping up? This is trading crazily crazy. So that's an adjective and an adverb, I guess. Crazily crazy. But it's up today. So 30-minute high, that's a put spread idea. Costco gapping down on earnings, but I'm actually holding this 470. So 30-minute high, that's a 0 DTE put spread. FedEx, as we know, caused the gap down pre-releasing. Now gapping down again to new lows. So that's put spread idea, 30-minute high. I have no idea if this is going to hold. Costco looks 10 times better. Boeing, that, you know, we mentioned this, just didn't give us a real great entry, but that's been bearish ever since this gap down. They're paying, I think, 200 million settle problems about their max misrepresentation. Now Daku was also in the news. I think they got a new CFO. It's not ready yet, and it's a bearish weekly and monthly. I can see here. See this little tidbit right there? That is ugly. That is momentum is down, 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 down. But let's say this hypothetically gaps down like it is and closes above this end of day base. Let's say it closes at 55. Then Monday, maybe we do a put spread. Do you have NOV gap buys on the list? NOV oil, you mean? A gap buy? No. Do you have novice gap buys? No, I don't. I do not. The way to do that is just, well, we can pull up TC 2000 at the open and see what is gapping down the most. And then look at the pattern, or you could have done that pre-market, but do I have it right now? The answer is no. This LITM gapping up big here. BCTR, nice. We're short this. Now, see, this was another fantastic 1, 2, 3 that we entered as a new trade yesterday. So now with the gap down, I'm going to just move stop over this 15-minute pivot, 25.51. We've already covered a third. All right, thanks, Ty. Yeah, that would help. Now we got our Goldman gapping down. We might, you know what, let's also cover another third lot, 5-minute high. Well, I don't know, I'll keep an eye on it. XCL, we're short. That looks great. I already moved stop break even yesterday. CTVA. All right, so I gave this short a 10-minute low. It looks good. So that's good to go. Spiders, didn't bounce a whole lot from that pre-market base, and now it's rolling from the 5-minute sell setup. So yeah, still look lower here. Thanks, Stephen. DKS. I don't know. It's down 4 bars at the 50, Scott. I just don't know. Maybe I don't know. It's not a no-brainer.